Despite runaway inflation and a volatile currency, Fitch Ratings has affirmed Kenya's B+ outlook. Joining us now on the line from London to discuss the decision taken by the ratings agency is Veronica Kalema, who's Director for Sovereigns at Fitch Ratings. Thanks so much, Veronica, for your time. We're told that Fitch has affirmed Kenya's long-term foreign currency issue default rating to a B+ and the local currency rating to a BB-. What does that mean exactly?
The rating has, been affirmed. So Kenya's creditworthiness has not changed, despite the fact that it's facing headwinds from rising inflation and a weakening currency. In our view, we affirmed the rating based on a sustained economic recovery and the start of fiscal consolidation. The macro situation does carry risks, but these are felt to be consistent with the current rating level.
All right, let's talk about the currency rating, because we do know the Kenyan shilling is one of the worst performers within the emerging market space, really vulnerable to external shocks and to rising inflation. For investors that want to do business in the country, the volatile currency is a put-off. What do you make of it?
Yeah, obviously, it's not good for it's not good for investor certainty. It's not good for certainty. So, and I guess. The government, the central bank, is trying to implement some measures to try and stabilize it. But in my view, inflation is due to the global food and fuel prices, the regional drought, and the weakening currency. The central bank believes that inflation is due to exogenous and/or temporary shocks, and that hiking interest rates will not make a difference. But inflation is still too loose, even though it may temporarily be driven by food prices and the hugely negative interest rates, and given prevailing balance of payments pressures are contributing to depreciation of the currency.
An affirmed rating is also predicated on the fact that Kenya has a diverse economy that spans from agriculture to telecommunications, and that recovery, although modest, is consistent. Do you expect this economy to continue growing, given some of these inflationary pressures and other problems that we're talking about?
Yeah, I think that there's a couple of factors that are underpinning the growth. It's improved. It's improved stability as following the election, and that is encouraging, and following the constitutional referendum, that is encouraging investor confidence and domestic and international investor confidence. That's kind of supporting growth, and the fact that the government is spending a lot of money on capital expenditure, and that the really low interest rates are actually encouraging private credit and private investment.
Let's talk about fiscal consolidation and whether or not the government has managed the economy adequately, in your view. We know that there's been a lot of recurrent expenditure and expansionary budget to cope with some of the pressures of the previous recession, but the government's trying to reduce the deficit. Do you think that there are programs on point?
Yeah, I think so. I think they implemented a stimulus during the crisis, and that sort of helped support growth. It could have been worse. The growth outperformance could have been worse. Public debt is larger than other countries in its single B rating peer group. However, Kenya has a more developed local market, and this means that Kenya has higher debt tolerance, can handle more debt than other countries in this peer group. And so we see the fact that we see the fact that although debt is on the higher side, it's manageable. We're not too unduly concerned at its more gradual downward trajectory. A faster consolidation would have jeopardized infrastructure spending, which is important for higher growth.
And very briefly, Veronica, we hear that the Kenyan authorities are talking about launching a Eurobond possibly next year or the year after, give or take. How would these ratings influence that process, if in any way?
Well, the pricing of the Eurobond will be dependent on the rating that we have for Kenya. So that's how the rating would influence the Eurobond.